What a busy week here at the Flat Earth Trading Society. We have another exit on our hands. So again, big rally this week. We were in way more longs than shorts, so this was a very good week for our Flat Earth Trading Society. We have an exit on Foot Locker. The entry was long 27.90 and the exit was at 30.42. Let's check out a chart. As you can see, Foot Locker had a really nice gap up. They got an upgrade from some Wall Street brokerage, and this is where we have no control of news. We have no control of it whatsoever. But here is the greatest thing about trend trading. When something is trending up, it's more likely to have good news on it. Why? The reason it's trending up is because the company is likely doing better than it used to be. It's likely has good business. It's doing the right things. And so news that comes out on it is most likely to be in their favor. And then a stock that is in a downtrend, that's moving lower, is probably not doing so well. Business isn't going as good as it used to. So any news that comes out on it is most likely going to go lower. We actually did a study on this phenomenon at Maverick Trading. And look, these kind of things that happened with Foot Locker, where an analyst came in and no one knew that it was going to happen, these are what are called unknown unknowns. There's no way to backtest and quantify for that. So what we said, what's the news we know? We know when a company is going to announce its earnings. So we ran a test, and basically we said, if there is a stock that is trading above its 50-day moving average, we want it to be long right before the earnings report and sell it right after. So that means that if it is after the bell, we would buy the stock at $3.59 and then sell it at 9:30 in the morning. Now look, we did this all simulated with back testing. We didn't do any live testing on this. The results were 59% of the time the trade was profitable. Let me say that we did the same thing on the opposite side. If the stock was trading below its 50-day moving average, we would go short at $3.59 before the earnings and then cover it at 9:30 in the morning. After we ran all these scenarios on the S&P 500 stocks for like the last 20 years, the win-loss was 59%. So basically 3-2. So 3 times we were right, 2 times we were wrong. All we were doing was buying the stuff in uptrends and shorting the things in downtrends into an earnings report where we had a known news announcement coming out, and we had basically a 60% chance of being profitable. Now, the cool thing was when we broke down which was better. So the profit factor on the longs, I think, was about 1.4. So we actually had a nice profit factor on the ones that we bought. The profit factor on the ones we sold short was 1.9. So it's actually a little bit better to be short in a downtrending stock going into an earnings report than being long. Now look, this is just a study we ran. We run these studies all the time, but it just goes to show that trending stocks get more news in their favor than against them. And that's always been my premise, and that's why I wanted to run the study. I wanted to know if that's really true. All right, back to Foot Locker. That went off in a different direction, but I'm really happy that I shared that with you because it's just such an important part of why at Maverick we are really solid in the trend following side. Big gap up, and you can see it did not hold. Well, look, it just came down and it touched our trailing stop ATR, and we were knocked out. So we were knocked out at 30.42. In all, that was a 9% gain or 1,042. This stock almost got to our 4x ATR. It got within about $200 of moving up a stop even tighter, but it didn't. It retraced, and we ended up with a 9% return. So that is trade number 43 in the books. Let's just keep on doing what we're doing. Goodbye, everybody.